when the US government is confronted with an interest rate that reflects that higher level of inflation, it's impossible to finance. Even right now, interest rates are about consuming almost $1 trillion a year. We're close to $1 trillion a year in interest in the national debt. In a couple of years, if the Fed has to keep raising rates, let's say they get to 6 or 7%, but more and more of the short-term debt has a chance to roll over. Plus, we have to add to that all this new debt that we're going to borrow. In 2 or 3 years, it could be $2 trillion a year in interest on the national debt. Where is this money going to come from? The U.S. government only collects about $4 trillion in taxes. How can 50% of tax revenue go to interest on the debt? Right? That's like somebody that earns $100,000 a year. They have to spend $50,000 a year paying the interest on their credit cards. You can't survive with that type of interest expense. So we are headed for a debt crisis, a sovereign debt crisis, and a currency crisis. That's real. What we just went through with the debt ceiling, that was fake. Nobody wants to buy treasuries because the yield is not high enough to offset for inflation. And so then the Fed has to print even more money to buy the treasuries that nobody else wants. And then an already elevated inflation rate starts to spiral out of control. And now you're talking hyperinflation. And so that's the risk. And then what happens there? Well, the dollar is imploding in value. The cost of living is skyrocketing. Then what does the government do? Well, then they panic and they impose like price controls, exchange controls, all sorts of desperate measures to try to prevent prices from spiraling out of control. And then you end up with shortages. You end up with long lines for basic necessities. You end up with black markets. And so you turn honest Americans into criminals because the only way they can buy stuff is if they do it illegally, right, on the black market. So a lot of this stuff is going to happen as a result of the fact that politicians do not want to accept this responsibility for what they've done, level with the American public, and make the tough political choices that are actually necessary to rein this problem in before it gets out of control, which means huge cuts to government spending and telling a lot of people that they're not going to get what they were promised. Now, they're not going to get it anyway. It's just that the politicians won't tell them that. They're just going to inflate these obligations away. And so, yes, you're going to get your Social Security benefits. They just won't be worth anything when you receive them. I think that there is no politically viable way to make meaningful cuts in entitlements without also making meaningful cuts in other parts of the budget. We have to make meaningful cuts in defense, right? And I don't think that we should leave our creditors unscathed, the bond market. I think that there should be a shared suffering among everybody who is owed money by the U.S. government. I mean, just like in any bankruptcy, you can't take certain creditors and say, well, you guys are going to be made whole and we're going to, make everybody else pay. So I think that we should restructure the debt and we should tell people who own U.S. treasuries, which of course would include the Japanese, the Chinese, right, the Saudis, everybody, you know what? We don't have the money to pay you back. And so we're not going to do it. Now, we're not going to give you nothing. We're going to give you something, but it ain't going to be 100 cents on the dollar. I mean, we've got to spread the pain because I don't think people on Social Security are going to accept the fact that they're not going to get their money, but we're going to prioritize the Chinese and give them all theirs. So I think there's got to be some kind of acknowledgement that we're broke. And everybody has got to take, a haircut on what they've been promised. And if that means that we end up with a lower credit rating, well, we get a lower credit rating. That doesn't bother me because I want the government to live within its means. I don't want the federal government to borrow any money. Maybe if we have a lower credit rating, that's a way of getting a balanced budget. We would be better off with a balanced budget anyway. So I don't care if our debt gets downgraded. But, in my mind, if we actually got our fiscal house in order, which included, a restructuring of our treasury debt, we would actually be a better credit risk at that point. Just like, if somebody goes through a bankruptcy and they get rid of all their credit card debt and a lot of stuff and they have a clean slate, you'd be more willing to lend that person money after they've already wiped out all their debt, than before when you might end up, as just another creditor in a bankruptcy. So there's going to be massive inflation to anybody who buys US treasuries now. But if we can get our fiscal house in order, reduce government borrowing, reduce spending, balance the budget to the extent that we did need to borrow money for an emergency, we'd get a better deal. We actually needed it. But I don't think the government should need to borrow money. They have the power to tax. If you want to pay for something, then tax the people to cover the cost. And if the people don't want to pay the taxes, then don't do it. The taxation keeps government honest, right? But with inflation, the government gets to pretend they're giving people something for nothing. We can have all these programs and you don't have to pay for it. Well, if I don't have to pay for it, sure, I'll take the program. But if you want me to pay for it, well, maybe I don't actually want it. And I think if Americans got the bill for a lot of these programs that they claim they want, they really wouldn't want them. Nobody's going to get their money back. I mean, that is reality. So the question is, how are you going to lose as a creditor of the United States? Are you going to lose because America doesn't pay you everything that was promised? Or are you going to lose because they pay you what was promised? They just pay you in a money that doesn't buy very much. So you're either going to lose to honest default or you're going to lose to inflation. But those are your only choices. You're going to lose no matter what. I think if we act fiscally responsibly now, which would include a restructuring, our creditors are actually going to lose a lot less. Well, the banking crisis was a byproduct of everything the Federal Reserve has done, everything the U.S. government has done to create that crisis. They set the stage for it, by insuring bank deposits. They never should have done that. Of course, that goes back to the Roosevelt days, right? It started in the 1930s, but it was a mistake. And, the moral hazard has grown ever since. Banks should have to stand on their own creditworthiness. Banks should have to compete with one another in a free market based on safety. That should be a primary criteria. Where do you want to put your money? Well, I want to put my money into a bank that doesn't do dumb things with it. I recognize when you open up a bank account, you are a creditor of that bank. You are loaning money to the bank. Well, how is it that you can loan money without any regard for the ability of the bank to pay you back? I mean, only the government has done that. In a free market, the banks that had the best balance sheets, the best loan portfolios, those are the ones that would get the deposits. Today, the bank that gets the deposits is the one that's closest to your house. No one gives a damn about what the bank does with your money because the government has got it all guaranteed. Well, you know what's come up? Rates have gone up. And so now the banks are in trouble because their customers want their money back. Why? Because they can put it someplace else and get a higher yield. Why leave it locked up? The depositors are not locked up. The banks, they're locked up. That's why for years I was warning about these banks again. Everybody was saying on Wall Street, oh, interest rates going up is going to be good for financials. I said, no, it's going to destroy the financials because it's going to blow up their balance sheets. It's going to cause huge losses for the assets that they own. And that's exactly what happened. So this was not something that came out of left field. Just like the 2008 financial crisis, it was easy to predict. That's why I was able to predict it, right? I can only predict stuff that's easy to predict, right? I'm not that smart, right? So it has to be pretty obvious for me to understand it early in advance. And then, of course, their solution, more government bailouts, more money printing, actually makes the ultimate problem worse.